Welcome to AGNT, the podcast for enterprise tech meets the Agentic era. I'm Gemma Allen, joined by my co-host Raphael Dornano, broadcasting from the New York Stock Exchange. On every episode, we unpack how intelligent systems are reshaping companies, markets, and the way real work gets done. From Fortune 500 boardrooms to breakout upstarts, we're digging into the strategies, technologies, and people defining the next chapter of AI. Let's get into it. Raphael, welcome back to the NYSE. What a crazy few weeks. You were in Europe, right?
Right.
Had a good time?
Had an amazing time. Sunny Europe was very nice.
Well, hopefully we'll have a sunny New York soon. Any day now. So, the world of tech, the world of Agentic. It has been a busy and chaotic couple of weeks from the media perspective. Lots of interesting headlines. Let's first talk about a very interesting headline today, which is the Altman and Musk case is kicking off in San Francisco. I saw a headline yesterday that said the judge mentioned that some of the jurors were having a hard time pretending not to have a bias against Musk. What are your thoughts?
Interesting. Well, I mean, I put this in the perspective of we're having these three major IPOs that are going to rock the public markets this year. Again, Anthropic should be coming first. OpenAI, I'm not sure. We have, of course, XAI. I mean, I think all of this should be seen into that broader picture where it's one more problem for OpenAI that is having a lot of problems these times, we can say. And I mean, of course, it's going to be a very dirty fight between Musk and Altman because I don't think they're very good friends, right? But I look at this from what are the implications for both companies as they approach the public markets. And again, it's just one more like huge point that could have a big impact. Like the amounts we're talking about are like not small amounts.
Well, speaking of OpenAI reaching the public markets, I wrote a piece for Forbes maybe a week and a half ago about Sarah Fryer, right? On the at least rumored beef or misalignment between her and Altman and how quickly they should go public, right? And I mean, the rumors are in the internal kind of media ring that she thinks they need to take a step back, slow things down, and he has a much faster plan in mind. I mean, you know, she's a very credible and experienced and tenured chief CFO. Like, you know, that woman brings a lot to the table. Like, what are your thoughts on that whole divide in terms of him racing against the clock and her saying, hey, like, let's, you know, slow the brakes a second. We have a lot to figure out here, especially as it relates to how these folks here in Wall Street will respond to spend, right? And to revenue versus spend.
Well, I think that the reason why Altman is racing to the IPO is you have a story of narrative here that is super interesting. Like the company that goes first is the company that is going to set the narrative of what is the moat for a foundational model company, what matters, what to track, and kind of what does the species look like. And so if Anthropic goes first, of course it has huge implications because then OpenAI is compared versus Anthropic and not vice versa. So I think from Sam Altman's perspective, he knows this very well. I mean, and he wants to rush into this. Of course, Sarah, I mean, I think she's right in the sense that these models are very complicated to understand. They require a ton of nuance. And I think I've said this repeatedly, like Anthropic, XAI, Minimax, DeepSeek, whatever, those are all foundation model companies, but none of them has a similar business model. Like some are B2B, some are B2C, some are like specialized on coding, some less, some not as much. I mean, it's not one category, it's multiple categories. So that matters a lot. And it is not understood by the public markets because it's the first time we have these companies going to IPO. So there needs to be like a clear narrative that is built on top of a credible financial story, and the credible financial story of you don't know how you're going to monetize all of that while at the same time spending trillions in compute might be a bit of a problem for the public markets at a point where we're having a lot of nervosity around the spend. I mean, today we have the earnings from the big hyperscalers, right? The semis today the semis have been on a tear over the past weeks, and that is performing like crazy. But there is this like very strong worry around the corner where when the Wall Street Journal says, oh, OpenAI missed their numbers, you have all of the stocks linked to OpenAI that tumble. We don't even know why, but people were very scared. So I think what is at stake is that it's going to be important, the message that comes out, who says it first, and the numbers that back it. And I think it's going to be a very messy story.
Well, another interesting story this week is DeepSeek, in terms of what that has, that whole open source China versus the US. How much of a threat is this? Is DeepSeek to companies like OpenAI and Anthropic, right? Are we going to see more DeepSeek embedded models here in Fortune 500s on US soil? Like, how quickly is that going to happen? What are the realities around that, right? What would it actually mean for companies to be able to deploy DeepSeek? I mean, the commentary is that right now, up until this point, actual deployment of DeepSeek in enterprises is below 2%. In fact, they're saying that less than 2% of Fortune 500s have even touched the technology. Perhaps that's because of, the pros and cons of open source and the perspective of what it would actually mean to, you have a choice, send your data to China and it comes back to you, or to actually have open weights in your own environment, right? And the infrastructure spend on that is colossal. And I mean, if the hyperscalers can't figure it out, how could we expect a Fortune 500 to figure it out in the enterprise space? What are your thoughts? Like, how real do you think this threat is?
Well, look, I've been following the Chinese model companies for a long time now. And of course, when DeepSeek came out last year, it was like a very important event with, at that time, huge implications on the public markets the day it came out. Everyone was very panicked, which did not happen this time, which is, not surprising, but interesting, I would say. I think what happened last week was not just DeepSeek. It was Minimax, Zaipu, like all of those models that came in a flurry on top of the closed models from Anthropic with Cloud Opus 4.7 and GPT 5.5, both that came out very recently. So it's like in 1 week or in 2 weeks, you have 7 new models that are all very good. I think what we have seen, which is interesting, is that the moat has moved from the pure model capabilities to how these models are orchestrated in the enterprise and how they have built-in agentic capabilities. And I think the new, the takeaway from last week is really, and Kimi K2 was interesting, I would say, on that point, it's that they are architected around deploying agentic AI in the enterprise, and their moat is what OpenAI and Anthropic were building last year. When in May last year, when we were asking ourselves what makes a moat, we said the moat is not in the technical power, it's in the orchestration. And this was 1 year ago. And 1 year later, the Chinese model companies are doing exactly that. So what does that mean for OpenAI and Anthropic? It means that now they have to go 1 layer up because that's not their moat anymore. And I think the Chinese model companies are at par with OpenAI and Anthropic in, again, those orchestration capabilities. So does that mean that Anthropic has to go into applications? Does that mean that OpenAI has to go into applications? It's like those companies are in a race, and it has just accelerated their need to go higher, better, to be able to differentiate themselves. Remember, Anthropic launched 2 weeks ago the managed agent service by which they're billing the runtime on top of the actual APIs, which I think is interesting because it's a new layer of revenue. So it's one evidence of, okay, Anthropic still has this orchestration mode, but it's not. What is interesting is not the Chinese companies for the Chinese companies, it's how the Chinese companies are setting the clock for the US closed source companies at the time where they go to IPO and at the time where they have to face this huge compute crunch, which is a problem, and which is one of the reasons why at some point there was a pause on the semis in the public markets, because everyone was like, oh, well, okay, Anthropic has caused this massive SaaS sucker, however we call that. But if Anthropic doesn't have enough compute, well, is Anthropic a threat? So we don't know. So I think that what this shows is, to your point, no one is really actively deploying DeepSeek in the enterprise, though there are a lot of platforms that allow to deploy those without having to run this on your own servers. And those companies that are in the private markets, Fireworks being one of them, are on fire in the private market. So I think there's a way to go around that without all of the architectural constraints of deploying that without the hyperscalers. So I think that's being like managed to some extent. But for me, what I would say enjoy in this debate between the Chinese and the US companies is how it pushes the competition always one step above.
Well, talking of pushing the competition, we have seen Jensen go on the record and say we need friendly relationships with China. We want geopolitical positive relations as much as we can allow, right? It was also interesting that some of the commentary around DeepSeek also mentioned Huawei, right? And how that is potentially now, in some respects, maybe encroaching on the NVIDIA moat. You said earlier, OpenAI missed the customer revenue forecast and the market goes crazy, right? People panic. They think anyone who's aligned to OpenAI, oh my God, what does the future hold? But similarly for NVIDIA, that company is just on the up all the time. And there are evidence, perhaps it's yet to be fully seen, that maybe there is Chinese solutions too from the perspective of what NVIDIA have built their moat around, right? So it's an interesting time, I think, in terms of how things are being, I guess, at least the narrative has been led and the response has been ingested. Here, what are your thoughts? Do you think NVIDIA also has some kind of rougher days on the horizon?
Look, I think NVIDIA is a tremendous company with a leader that is, the most visionary leader, we can say that. They just passed the 5 trillion mark, which in itself
Incredible.
Is also a huge event. The fact there's an oligopoly in GPUs is not new, and that is only going to accelerate. I think that's been the case for the previous months, and it's come in the picture that NVIDIA doesn't have a monopoly. It's multiple players that are in that market. I think we've also seen a very interesting trend of the ratio of CPUs to GPUs in agentic workloads that is completely going in the favor of more CPUs per GPUs, and AMD released an interesting study on that point recently, which is another change of, GPUs are fundamental, but CPUs are very fundamental as you deploy agentic AI. I think to the point on China, Huawei is still not there, and there's still a gap. However, the release of the Chinese model companies that we saw last week were a lot around architectural innovation, around, for example, mixture of experts, or around how do you bake into the model architectural efficiency to allow inference to run using less compute. On the training side, we had the manifold constraint that we had talked, which was one of the key points of the DeepSeek model. I think to be honest, we haven't had that breakthrough yet. So the need in terms of huge amounts of GPUs that come from NVIDIA is still very present. And I would say that's a consensus view. I think, however, that things are approaching, maybe something is around the corner that is going to impact this whole hardware space. I don't know if it exists yet, but my guess would be that something is going to happen in how these models are built, which could change the game very quickly. There's going to be a ton of demand for NVIDIA. Again, they're not alone anymore. I would say that path accelerates. I would say there's going to be more and more choices, putting aside the CPU GPU debate, which is another one. So I would think the volume compensates, but NVIDIA is not the only person in town anymore.
Another interesting headline this week surrounding the whole debate was while tech is in somewhat of a nuanced position geopolitically, there has been a push in the financial side of the US, right, to see more and more Chinese investment, okay? These different funds led by companies like Goldman Sachs are looking very actively on China, and maybe it's because of inflation. There's a whole load of macroeconomic factors, but it's evident that there is a huge, war on tech arising from these two continents, and perhaps people follow the money, right? That just tends to be how things go. So I think it's interesting to understand, okay, while there is a kind of a geopolitical situation over here, is somewhat of it maybe a form of pantomime, while markets move in a particular direction as they always do.
I mean, I think to comment on that point, I would talk about the Manus acquisition being of by Meta being blocked by the Chinese government. I think that's kind of been under the radar, but that was pending. I mean, when Meta bought Manus, that was a big deal. I mean, Manus is like one of the first agentic players that really came out. And I mean, to my best understanding, this acquisition has been blocked because the Chinese government has been like, oh, you cannot just go to Singapore and do that. And so, I mean, that's a big deal in what is happening. And that shows that, I mean, there is geopolitical tension like right in that deal.
I mean, I was in some ways surprised that people were surprised at that response by China. You know, I almost expected it. I assumed, and I read headlines, you know, oh, Meta, Manos researchers have been working alongside Meta researchers in a lab since December. I'm like, well, in some respects, so what, right? There had to have been some sort of expectation that the Chinese were going to look at this and think, would we allow this happen on US soil? Right? Like, would we?
I mean, I agree.
You know,
it's a very fair point.
It's practical, right? Above all else. So, moving on, looking at stocks broadly, okay, and I know we talk a lot here on this show about SaaS stocks in particular. I mean, it has been an interesting first 4 months for SaaS, okay? Like some of these companies have taken huge hammerings since the start of the year. We think about companies like ServiceNow, Workday, Monday.com, Salesforce. You know, there is a lot of concern as to like how real or how short-lived these challenges are, right? Like you think these are going to continue throughout the end of the year. And again, what are your thoughts on this whole debate around, you know, short-term capability doesn't necessarily replace longer-term context, right? In terms of what these companies have and can deliver for the markets.
Right. So my first point would be that the SaaS apocalypse is not over, and it's done because there's a war in Iran or because there's other problems on like inflation, the job market, whatever. That, I mean, the fundamental problem of what happens to the terminal value of a software company in this new agentic paradigm, that is not over. That is only starting. We're seeing companies that are actively responding to that. Like, for example, Salesforce, I think 2 weeks ago, announced its biggest restructuring in 27 years since the company existed when they announced Headless 360, by which they're saying, well, we exist also through APIs. I mean, and we don't need the interface. I mean, there's a lot of other announcements that came in that announcement that they made, but that was like a very important like milestone, and we acknowledge that things are changing and that the agentic era is here. So I think that was an interesting one. Comparatively, when we look at the ServiceNow earnings, where ServiceNow was, I would say, hammered by the stock market 2 weeks ago, no, last week, sorry. What happened is that they announced incredible results. They actually had very strong growth in bookings, very strong growth in ARR, but for example, they said, well, our gross margin is lower, but that is not a surprise. Every single gross margin in SaaS is going to be lower as you incorporate AI and agentic AI in your solution. Like, that's the most obvious thing. But yet investors were very surprised. Oh my God, the gross margin is going down. I can tell you right now, the gross margin of every single company in the software universe is going to go down over the next months as agentic AI reshapes the profit and loss statement of every single software company. So, I mean, it's kind of unfair for ServiceNow on that. They get punished for like the most obvious thing in finance. Of course, there were other problems, but it was funny to see that the media was picking up that they were disappointed by the gross margins when this is perfectly normal in my view. So what that shows is that there's a ton of nervosity where we don't know what to look for. What is clear is that when ServiceNow says, oh, we have a ton of AI revenue, no one cares about that because that is not what the market is looking for. The market is looking for, what is your terminal value in the age of agentic AI? Are you still around over the next 5 years, the next 10 years? And how do I get the maximum reassurance that this is happening? So I think every single SaaS company today, SaaS or software company, I mean, whatever, should be careful about what do they mean? What is their value in this new paradigm in which the rules have changed, in which the P&L has changed? And again, bye-bye 80% gross margins. That is not happening anymore, but that's fine because you also have new network effects. So you have like maybe less margins, but much better growth. So it's a trade-off. Do you prefer growth? Do you prefer margin? So let's see. But it's like, this is new. We need new mental models, and just saying, oh, we have AI revenue is not going to reassure any investor. So in a nutshell, we are still in the SaaS apocalypse. Companies are pivoting to, we need to acknowledge this new reality. A lot will emerge better, stronger, I hope. Some will not emerge stronger at all, or will just not emerge. And by the way, it's the same thing in the private markets. We saw what happened with the company from Thoma Bravo that was given to the lenders. I'm not a pessimistic person, but I think that's just the beginning. And we had that discussion before on the show. Like the private markets are like, oh, the public market companies are getting hammered. That's maybe normal, Monday.com, et cetera, et cetera. I mean, why would the private market companies that are slower, that are, smaller most of the times, and that often do not have the same growth rates for some of them, why would they be not at risk and only public market companies? It makes no sense. So, of course, the private market companies are also going to be in big trouble, and maybe to the same proportions as the public market companies. I don't know, but I mean, I think it's going to hurt. And so we are just at the beginning, at the first 1% of what is happening, in my view.
So before we close, I think it's interesting too to bring up this whole topic of horizontal integration, right? And what it has meant in the SaaS space versus what it currently means right now in the agentic space. We have a lot of startups on this show. We speak to startups, all day, every day. And there are certainly a number of companies that are really cutting their teeth and making an impact, taking a very specific swim lane, like a very clear beat.
Yes,
we're not trying to be everything fintech. We're just trying to be an agentic solution for underwriting. Like that's one great example, right? And that is a company that is essentially staking a bet saying, hey, we are going to be a horizontally integrated part of a stack, okay? They're under the same threat by Claude, by any of the large LLM or frontier models that the SaaS universe is, okay? But perhaps part of this is that the SaaS response to some of these horizontal, high value add parts of their integrated stack offering hasn't really been messaged well. Because there has been a lot of value added, in very specific and nuanced spaces within set parameters for a very long time that are now not just under threat by frontier models, but also under threat by other horizontally integrated agentic players, right? Like the response there, even the kind of differentiator there of understanding value versus potential value, it just seems as though the messaging is a little bit weak.
Well, I mean, again, there was this article that was very interesting, written by one of the most prominent venture capital investors, which said, well, the new TAM of software is services, because now, and it's when you look at the batch from YC Combinator that was announced this week, you see all of these companies that are building agents to serve a certain number of cases across industries, across functions. Like you have your new plumber, your new architect, your new, I don't know, whatever function you imagine one, and you have an agent that is going to do that. And so you have the software that says, I'm selling you not software, I'm selling you like a business outcome with those agents. For me, that is not very new. I mean, I don't think that's new, but people are, apparently the market is discovering that there's an expansion for what software can do. I think that we need to take a step back on that, and what software can do is be the secure environment to actually hold all of these agents that are going to be doing plumbing, architecting, translation, you name it. And the function of software is going to be like kind of this playground in which you actually host in a secure way, in which the agents can talk together in a non-messy way without the huge security breaches. Look at the Cursor incident that happened this weekend. Oh my God. Like that companies are not going to be deploying agentic AI at scale when they know that all of their databases can be erased in 9 seconds. That's not something that is going to accelerate any of this transition. So I actually think that, yes, there is an expansion of TAM in between how software goes into services and starts performing business functions. I think that that is not new, and that we have been talking about that over the past year. I think what is new is this new role of software in which there's an additional role for these companies that are being destroyed by the public markets, is they can be the secure environment on which these agents are held, in which the agents talk together, in which the agents connect to the data, and make this a reality in the enterprise. And the word matters. And I think that's another avenue of growth that is being opened for some of these big software names. So I'm very optimistic around what software can become. I think that the notion of SaaS, as in SaaS 2.0, is over, because that is not how software is going to be consumed. And again, the profit and loss statement is going to change fundamentally, but there's a new reality that is starting to emerge that will be defined over the next months, which for the companies that actually succeed will be way bigger, with a way bigger TAM, with perhaps better unit economics, and that is starting to be built out, and it's very exciting to see what is happening.
Well, Raphael, I think we need to leave it there for this week. I know you have an exciting couple of weeks ahead too, so look forward to having you back here next week, and I'm sure there'll be lots to discuss in the world of agentic AI and all things defensibility, offensibility, and where exactly we're headed. I'm Gemma Allen, joined by Raphael Dornano. This is AGNT. Thanks for watching.